And good morning and welcome to VSA Capital 5 Minute Morning Miner on Thursday, Thursday, 13th of April. Good morning, Paul. How are you?
Good morning to you. And after rebooting my Microsoft, I'm much better. Thank you.
Good. You were having a few troubles getting on this morning. Let's just start off. There's one interesting thing that's caught my eye, which does actually have an impact on mining. That is that China reported an unexpected surge in exports. They were up 14.8% in March, and actually the analysts have been expecting a fall of 7%. That's a massive rise. But what is interesting is one of the main exports that created that surge was solar panels. Now, one of the keys to solar panels is silver. And that is why China is buying silver like there is no tomorrow at the moment. Why the price of silver is absolutely romping away now, $25.50. I think it's going to $30. And of course, we all know the impact of a higher silver price on silver producers. It's a very leveraged game. And the way to play it, of course, is Guanajuato silver, which, of course, is traded in London yesterday. Actually, since yesterday morning when we said, look, the ARB is crazy. It's actually jumped about 30% in about 36 hours. Currently, it was showing 27.9, now showing 33.37. Rather a wide spread. I think the market makers, frankly, are taking the mickey there. But I can tell you that there's no stock around in London. So all we've got to do is buy and it goes up. And it is going to go higher. But there you are, a little rant for Guanajuato silver again. But we do love that company. It is the fastest, of course, the fastest growing silver producer in Mexico. Anyway, that gets the day started off. Probably everyone's fed up with me talking about it. Let's move on to something slightly different. And let's have a little word about Emerson, because you probably want to comment on the announcement today. What caught my eye was that they are very bullish on the price of potash. So for all potash companies, you want to watch out for them. And the one that we find rather interesting, you mentioned yesterday, of course, is Millennial Potash. But Paul, tell us about Emerson.
Yeah, Emerson full year results released today, and they made a clear comment that 2022 is all about all the negotiations, which are taking longer than expected or hoped for by the company, between the company and the Moroccan government on getting their environmental approval cleared. It's because they expected they should have had it by now and have the mine in construction there at Kemessat. Otherwise, they are still in regular negotiations, but seems to be the main part of discussions now is around water issues and how much will be needed and where it comes from for the Kemessat operation. That being said, there was a loss for the period of $3.2 million, which was relatively flat year on year, and the cash position otherwise declined with no current raise in that past year, so that it stands at $6.7 million.
Very good. Okay, let's also have a little to some news out. I think Paul today, a Q1 statement from Tharisa, the dual-listed South African chrome and PGM producer.
Yes, that's right. Tharisa here, dual-listed South Africa chrome and PGMs. Difficulties in production here in the first quarter they've reported here as a result of adverse weather conditions causing partial flooding in their production pit. As a result, they had to call in a second contractor in order to get pre-stripping moving faster than had been taking place, and they have had to mix what available feed they had from the pit with lower grade and poor milling quality stockpiles, so that their actual tons milled came in a little bit low. On the opposite side, the chrome price rose by about 20% during the quarter to $285 a ton, so that offsets some of the difficulties they have. That being said, they do expect that the recoveries will be somewhat adversely affected while they get the pit dried out, essentially, or while the weather somewhat improves, they hope. And otherwise, the Karo mine, which is their second mine development, which is going on in Zimbabwe, remains on schedule. Plenty of cash on the books here, $205 million in order to get things done, and the debt really reasonable at under $100 million. So they're in good shape here to weather these conditions. It's just whether or not they can get the um, main pit on track in the next quarter or two. We'll see.
We will see. Yeah. And then the other one maybe worth mentioning is Broaderhead Lithium, where the chairman Ian Stalker was having a chat with me. Remember back at PDAC, seems ages ago. It was actually only about 6 weeks ago. But obviously this has got quite the little gang of Ian Stalker and Jim Mellon and all of that lot involved. They are dual listed on the TSX, and most of the business is being done on the TSX. What they should do is drop their current London listing and make it an Aquis dual listing. It would save them a lot of costs. UK investors could still play in it. It's very much the obvious thing to do. I have suggested to them, but they don't seem to be responding yet. But there you go. I'll keep trying. But Paul, they've had some news today. Why don't you explain what the news is?
Yes, this was, they've actually completed the acquisition of 60 acres or 3 mining claims, which were lying inside their claim block within their project there in Arizona, the San Domingo Pegmatite District. It was in the middle there, and it also had and it was in the middle because it was one of the historic production sites there called the Lower Jumbo Mine, which was included there. That particular outcropping spodumene has a known length of about 1.5 miles, so it's a significant piece to fill in there in their claim block, such that they don't have any further restrictions on just where they can place drill rigs and develop resources on the project. They did not have to really give any royalties on that acquisition.
Okay, it's just, I mean, the lithium price has continued to sort of collapse recently. I mean, actually, all we're doing is heading back to what most people use as a long-term lithium price. It was the spot price that was obviously ramped up, shall we say, and is now doing a Duke of York, marching all the way back down the hill again. But of course, it has taken the shine off all the lithium stocks at the moment because it was a little bit of a bubble out there that people got slightly overexcited about. And with commodities, I think it's fair to say, Paul, isn't it? You know, if you have a really good run in one commodity, it's always the time to take your money off the table and move it into another commodity. They move around in cycles differently, don't they?
And they're influenced by geopolitical events and otherwise policy changes within individual nations as well, which will cause significant changes in outlook for individual companies as well as for commodities as well. So you have to play these fairly close to the chest, I would say.
Just be very aware of something that's running too far. Let's put it that way. Okay, very good, Paul. We'll speak again tomorrow.
Very good. We'll see you then.